Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, June 5, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, it's pretty obvious when you look at the daily chart. They did the thing where they go up to finally satisfy/touch the trend line that we've been looking at for a long time. Does that mean that the market has to stop today on that trend line? Can it continue higher tomorrow? And the answer is sure it can. It doesn't have to stop there. It doesn't have to do anything. We have a trend line that is a guideline. Now keep in mind, and those of you that trade with me in the live room each and every day, inside the number members, you'll know that I have a mantra that's not mine. I don't own it. I don't have a patent on it, but it is a traderism, which is first time, best time. What does that mean? It means that they already came within a chip shot, stone's throw away from the trend line before. That occurred on May 23rd. Then they sold off, and all of a sudden, here they are back at the trend line. They reset the tape, recocked the gun. When you look at a bigger picture for the monthly chart, for example, you see that it looks like they've just riding the trend line for a couple of months. Came close a few months ago, sold off, came back to it, riding the trend line. Can they get above? Absolutely. Will they power forward without a pullback first and not look back? Not so sure. What makes me say that? And this is something that we discussed in the live trading room today, which is the S&P has what I like to call waning velocity. Just from a web page, type in velocity formula, and you get what? You get displacement over velocity and time. How about you substitute displacement with distance? We've got waning velocity in the S&P. Does that mean the market turns tomorrow? No, it could last the rest of the week. It's not off of a 5-minute chart. It's not off of an intraday chart. It's off the bigger picture situation. So it could last a couple, 3 days. Figure it could last through Friday. Waning velocity. Write that down. Check on me next week. Go back to the last couple of videos, last few videos, whenever we look at the weekly chart, what have we been saying? They're eating time off the clock, building energy to move higher. That's what they're doing. They moved a little higher today, but from a weekly chart perspective, they didn't move all that much. From a daily chart perspective, from the low made on the 31st of May, they moved a lot. They're at new highs, the former high, which comes in at 533.07. They just broke above it today. Whether it's tomorrow, whether it's the following day, they will be back to pay a visit at that place. Staying above is bullish. Coming back below can be the beginning of a false breakout situation. We'll see. Keep your eye on 533.07. All charts act and react the same way. Nothing changes from the way we look at the charts. We're at new highs, therefore we go in our toolbox and see what we need at new highs. We need the most recent breakout area. Check, we've got that. What else do we need? Well, we're looking for a sign and or signal of a trend change. Intraday reversal. There's a small bucket full of items that we look for. These are all taught in the course Lazy E-mini Trader. Yesterday, we went over all the moving averages on all the charts, above all the moving averages on all the charts, and she was what? Bullish. The trend is your friend until your stuff gets thrown out the window. Nobody should really be terribly surprised. Little detour, check this out. Stock market moving up, bond market moving up, meaning interest rates are moving down. We had a lazy swing trader automagical algo system trade issued at 88.97 for the TLT. What happened? She went up. She provided the base hit with potential. We've got a base hit in our pocket. A lot of traders took this one with options. They do have liquid options. They made a nice profit on this particular trade. Where else can you make 5% quickly in the bond market? It's a whole year's worth of interest in the treasury market. The TLT is basically the exchange traded product that tracks the long bond. We've now got a risk-free, emotionless trade with additional targets on our hands. This was not only issued as a trade alert for the Lazy Swing Trader Automagical Algo system, it was also given to the live room members, and we took a look at the chart and explained exactly what I was looking for at the time it was doing it. The market was coming down here, off this top, coming down. And I told the traders in the live room, hey, I'm looking for a higher low situation and another rally attempt, and I have a number down here, and that constituted the trade. A lot of traders took it. A lot of traders made money on this trade. Within reason, within pennies, we basically nailed another low in the bond market. We've done this before. We did it right down there before. We nailed the low. Took a nice ride, took profit, let the thing pull back, and did it again. Lazy Swing Trader Automagical Algo system. What about inside the numbers today? Did anybody make money inside the numbers this morning? Live room members, inside the number members, post a comment under the video if you would please. Help a brother out. I'm not the brother. The brother are all the other traders just like you and me who are looking for the answers. Let them know if this is a place where they can get some of the answers and find success trading in the markets each and every day, learn how the markets work, and turn their trading situation around. That's the help a brother out. Even though it was basically a trend day most of the day today, we did have a short trade in the live room today and inside the numbers. Show it to you in a moment. Remember, pause the video, read the notes, go back to the chart, and double check the work. We started with a pre-market resistance zone, but that was narrowed down. It was altered a little bit by 9 o'clock. What's the early scoop? We'll start with, look, they're pushing up, heading toward a morning destination. Okay, where is that? There's a zone between 530.50 and 531.75. That is a tradable zone for a reaction in the other direction. It's overhead resistance, but should find resistance for a reaction back down in the other direction. Only above 531.75 on candle closes, not just a peekaboo, is the next leg higher, which they did later in the day. Now, write this one down too, because it comes into view later. 529.90 is support on the way back down. 529.90. Write it down on a sticky note real quick. Right of the vertical is today's activity. You can see here, 530.50 is the resistance part this morning. The resistance price, the first one. She opened up right in the zone, and what you'll see in the notes in a moment when I go back there is, right out of the chute, I said to traders, they're opening right in the zone. This is it. They had an immediate reaction back down in another direction. They retested it in this candle. High is 530.40 against 530.50. Funny how that works, isn't it? And then remember, 529.90 can be support on the way back down. Well, what does that mean in English? That means it's a target to take a profit on the scalp with potential. That's the base hit portion. That's 6 points. Our base hits are 5 to 7 S&P handles, 50 to 70 SPY cents. After that, we hold a trailer. As long as the trade doesn't go bad on us, then we see for a secondary move how much we can get out of it. Can we turn it into a stand-up double, triple, Whopper Junior, Grand Salami? You never know. This one, we got a secondary move. Let's see what else we have in the notes. This was all before the market even opened. Laid out the whole thing. And guess what? There's your morning schematic. Giving you the whole ball of wax before the market even opens for business. 9:29. They're starting out right into the zone. By the way, 9:32. Nice drop at the open. Nice base hit for those that took the short in the zone. 29.90, 529.90 can bounce the tape. Base hit in the books. 2 minutes into the day. How you doing? Now watch this. If below on candle closes, that's 529.90. The next place down, 529.35 to 529 zone. What does that mean? Another exit. There's your 529 You could see they spiked it, and that's where they ripped it back up in the other direction. Never went down to fill the gap. That was the next thing down below. And all that occurred, and it was given to you before the open. It all occurred in the first 10 or 15 minutes of the day. That's it. Maybe 20, 25 minutes. Back above 29.90 is the bull case for a further rally attempt, which they did. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, everything you need to be a successful trader during the trading day. If you follow the strategies, follow the numbers, follow the process of analyzing, the process of being an umpire, the process that we use for trading. All these things factor into success over the long term. It's a compounding effect. The knowledge and the accounts compound at the same time. How do you like dem apples? What about stocks on the move? We only had two today, DLTR, Dollar Tree, and Campbell's Soup, CPB. Let's take a look at the charts. DLTR, buzz cut at the open, support area 115.17, 113.07. This one, they bounced the tape exactly 1%. The low in this candle is 115.15. If you go down to a 1 minute chart, you could see here in this candle here, they hit it 115.15. The high just a couple of minutes later, 116.15. That's about 1%, give or take a couple of pennies. And therein lies the base hit. Now, they came back down, and then what happened? They bounced it off the second number right back to the first. Technically, there were two trades in there if a trader wanted them. But the rule is, painting by the numbers is after they give you the base hit off the first number in this case, for example, you don't let the rest of that trade go bad on you, so you're not taking the ride down to 113.07. That's a whole different number. How you doing? About CPB, how about this action? Market opens up here, trades all the way down into the zone, 43.22, 42.66. Rips it back in the other direction. Minutes later is already at a high of 44.32. Painting by the numbers, your average is, let's just call it $43. For argument's sake, they got to a high of 44.32 by 5 minutes later. How you doing? Nice participation in the live room. Nice rip. You never know which ones are going to give you the rocket ride. What's going on over in Camp IWM? Well, we no longer, at least as of today, have a divergence working. Remember what I said yesterday? The divergence will resolve itself one way or the other. So the chart is a divergence from daily chart to daily chart. But from day to day, all of a sudden, now you had relative strength in the IWM or small caps against the S&P today, finishing on the highs, never spiked the low. They just took off today. The chart from daily chart to daily chart has a divergence. They're nowhere near highs over here, but nevertheless, from a day-to-day perspective, all divergences will resolve themselves one way or the other. Either the small caps and the transports are going to reverse and go back up, or the spiders, the NASDAQ, the Dow, everything else is going to come back down and follow suit with the leading or my favorite market leading indicators. One of those two things was going to happen. If, it's a big F, they can get above the 20-period moving average, which will be the last moving average in the line of defense. They will be above all the moving averages. The trend will be your friend. And when you look at the weekly chart, it clears up the noise and you say, oh yeah, look at that. All they're doing is eating time off the clock after bouncing off the 20-period moving average for a couple of weeks. You look at the big picture, and there's nothing really wrong with the IWM. They could be putting in a lower high, but they could be eating time off the clock, and above all the moving averages, the trend is up, and you can't be negative the tape. Apples? You like Macintosh apples? What about the folks down at the transportation department? They were up over 1% today, on par with the spiders. They were just on par. No relative strength, but that's okay. No divergence today on the downside. Again, terrible chart below all the moving averages. There is something brewing here, but for now, from the day-to-day perspective, we did not have a divergence today. Doesn't mean it won't go down tomorrow. Today, the transports were up, but there's no great shakes. They're well below all the moving averages, and the trend is, in fact, your best friend. So bigger picture is there really is a divergence in the transports against the S&P, the Dow, the Qs, all that stuff. Doesn't mean anything happens tomorrow or anything's imminent, but we do have waning velocity. Could last another day or two. Put that on your sticky note. All these are little puzzle pieces. Big update for the Qs, up about $9, 2%, new highs. Nothing to say except new highs. You let them go until they put in a sign and or signal of a trend change. That's now the most recent breakout area. Whether or not they go higher, they'll be back to visit that spot. They did this spot, the 449.34. They broke out above it. They came back to run a test of it, got back above it, and took off, so we don't need that anymore. The next one is the next one. So at some point, they will find a high or another high. And they will come back to pay a visit at 460.58. You can mark my words, take that one to the bank. It's in the I'll eat my hat if they don't category. No great shakes for the XLF, up 12 cents, 1/3 of 1%, building somewhat of a bearish type of situation here. Potential lower high situation, teetering on staying below some moving averages. Going to watch this closely. If there's trouble in the financials, it will surface itself. What I have been watching also is JPM. When you look at JPM, something interesting is going on in the JPM chart. So now this just gave up the 20-period moving average after putting in one of these bearish, flaggish, wedgish channels here. And now they're starting to move to the downside, not participating in the market. JPM was down about 1% today. Something is going on. Watching it closely. There are hints and clues all throughout the market. The question is, can you pick them up? Can I pick them up? Are we picking up the correct stuff? Time will tell. This is one thing I'm watching. Put it on a sticky note. JPM not participating. One of the biggest, baddest stocks in the market, including the biggest, baddest financial stock. What about Smashmouth? Look at the volume today in Smashmouth. This is good volume. Could it be a new leg higher volume, initiated new leg higher, institutional participation? The answer is yes, it could. You could also be on an exhaustion move. Both could be true. We are the umpire calling balls and strikes. I'm not here to tell you which one it is because I don't know right now. But at new highs, what we are looking for is a sign and or signal of a trend change that will also come in the SMH or Philadelphia semiconductor space. In the spirit of all charts act and react the same way, no matter how high they go on this run, they will be back to do what? To pay a visit, run a test at the most recent breakout area, 250.85. Remember this one at 239.14. They ran up, they pulled back, ran a test to the most recent breakout area. Expect the same thing to happen this time on this chart and every other chart. That's the way the market works over and over and over again. Nothing ever changes. All charts act and react the same way. This is a teaching/learning institutional experience. If I told you how much I appreciate each and every one of you, without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.